Today's episode of the How to Trade Stocks and Options podcast is powered by FinClub and their artificially intelligent stock picks. With nearly 90% accuracy for the first half of the year, you'd be crazy not to try FinClub stock picks while you can. I mean, before they get bought out by one of the big Wall Street banks, because their technology really is that good. So head on over to tryfinclub.com to get nearly $1,500 in bonuses just for starting your free 2-week trial. So join the club, the Fin Club, to get nearly $1,500 in bonuses just for starting your free 2-week trial at tryfinclub.com. That's tryfinclub.com. Hey there, 10-minute traders, and welcome back to the How to Trade Stocks and Options podcast. Today, we have a special guest on the line, Matthew Timpane, and he is a CMT, a Senior Market Strategist at Schaeffer's Investment Research. And today, we're going to be talking about 3 better trading tips every options trader needs to know. Hey, Matt, thanks so much for coming on the line today. This is the How to Trade Stocks and Options podcast, brought to you by 10minutestocktrader.com. where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10minutestocktrader.com, Christopher Uhl.
Thanks for having me on, Chris.
Hey, I'm really excited to have you here. One of the team members there at Schaeffer's Investment Research reached out to me, and they're like, hey, would you like to have some of our team on the show? And I said, yes, of course. Any chance to get to talk to smart people like you guys, I'm definitely going to take it.
Well, thank you. We definitely appreciate being on the show and being able to share with your viewers as well, kind of a little bit about what we do and some tips for them.
This is going to be great. So let me read Matt's bio just so you guys get an idea of who he is. Matthew Timpane, CMT, and that is Chartered Market Technician, correct?
Yep, I'm a CMT.
Got it. And he's a Senior Market Strategist at Schaeffer's Investment Research. With over a decade of experience in finance, his areas of expertise include managing multi-strategy portfolios, trend following, and trade execution efficiency. Matt earned a bachelor's in business from the University of Wisconsin, and his analysis have been featured in national media outlets such as MarketWatch, The Street, and Forbes. So, hey, look, we got a real celebrity here on the line, so I'm looking forward to it. Definitely somebody smart and excited to have you on, Matt. This is going to be great.
Well, would you like for me to share my first tip with the viewers?
Yeah, let's do that. So today we're going to be talking about the 3 better trading tips every options trader needs to know. And so Matt's prepared that on the other end of the line, so we're going to let him take it away from here.
All right. Well, our first tip is we want options investors or traders to look across the term structure of an options during the option selection process. So especially when you're buying long premium, we want you to look at the implied volatility's term structure. Often we will find elevated IVs near potential event days. So what you want to do is, obviously when you're buying long premium, is get the lowest implied volatility or the cheapest option possible. Now, you maybe want to play that event, but you want to still be able to have that cheap option. We suggest that you go look out a week or 2, maybe past that event if the underlying security has weekly options, and purchase possibly a week or 2 out, because you can still maintain the actual move from the catalyst or the event, like an event earnings day or investors day or an analyst day. But you will pay significantly less oftentimes. Another thing that we kind of, when we're looking at the term structure that we're looking at, is you may not have that catalyst, so you're wondering why these implied volatilities are high. Well, this could be because it's either a stock that's in high demand, it's been trending, there's a lot of hedge fund money flowing into it, or other type of fund flows into it, or possibly it's a new issuance. We saw this phenomenon recently with your Beyond Meat, and as you know, it's extremely dangerous to either sell premium in those types of situations, but maybe you still want to take a directional bet on it. What we would suggest for you to do at that point is, instead of buying the premium closer to at the money, we would say go way deep in the money. So you're really playing the stock itself, more of the intrinsic value and less of the time premium within it.
Interesting. Okay, so when you say well deep in the money, I'd heard that referred to as the stock replacement strategy. Is that what you guys would call it there?
That is correct. It would be a stock replacement strategy, and we would look at this more for a short-term trade, nothing more than probably 4 weeks in this case, because you don't want to get taken out by that volatility crush. Sometimes that happens when the market makers start taking out that implied volatility.
Yeah, I've seen a lot of people who really, really tout the benefits of the stock replacement strategy. And just for the audience out there, right, you're buying a long call essentially, but you're buying it deep in the money. And by doing that, your delta has gone from, let's say, if it was 25 delta out of the money, 50 delta at the money, like 70, 80, 90 delta in the money. You're going to pay a lot more for it because you're paying for that intrinsic value, but there's also a less extrinsic value. So if you're really bullish on the stock, it's a way to get long without having to pay all of that extrinsic premium that's closer to at the money or out of the money. So it is definitely a way to get long for sure. But as Matt was just saying there, it's a short-term strategy, right? Because it's still going to decay away. And, if it never moves, you're still going to be out money because that extrinsic value, I mean, every option has extrinsic value all the way up until expiration. It may be really small, but the point is that if you are going to go with the long stock replacement strategy, certainly be aware of that decay. It's not like trading long stock because it will. I mean, there is a time value associated with this, and as every day gets further down the line, that extrinsic value that you purchased is going to go down. So you want the intrinsic value to go up in the meantime. Yeah, I totally get where you're going there.
Exactly. As you know, when you're buying options, you're not only betting on price direction, but you're also betting on time period of time frame to get that option to where your desired potential gain is, so you can take profits.
Yeah, I know a lot of people who have made a lot of money doing it that way, but it's really, you've got to be like exceptionally bullish, right? You can't just be a little bit bullish. You got to be real bullish in order to make sure that this is something you want to do.
Yep, you got to have high conviction in the trade itself, and you need to have your technical and sentiment drivers as well. Something I'll discuss a little bit later here as well.
Yeah, absolutely. And then if it doesn't work out, having that plan to exit the trade, you got to be on top of that, right? You may be super bullish, but look, the market doesn't care what you actually think. Exactly. The market will do what it wants. So you got to make sure you have your risk in line there.
Exactly. So, whether that's a stop loss at a certain percentage or a time stop loss, you definitely have to have that in place on those short-term trades.
Yeah, for sure. So what's your next tip there, Matt?
So the next tip is, at Schaeffer's, we are known for our long premium, but you need to understand when to go long premium and when to be selling premium. So what do I really kind of mean by that is, especially in recent events within the market, we have seen a lot of volatility here. So you'll start looking across individual equities and start noticing that their implied volatility levels have now skyrocketed up into a plus 50% of their 52-week ranges. And once you start getting into these levels, you really got to start buying that long premium, because you can, like we were just discussing, that implied volatility starts coming out of it. You will actually, even though the stock may be going up, say you bought a call, you actually may be going nowhere because they're taking that implied volatility out of it, or getting very little upside momentum. So at this time, when markets are like this, we like to start looking to sell premium instead. And what we'll do is kind of take a look at a broader market as well, because we don't want to get caught in possibly just waiting for the next leg down. So we will look at like a 5-day put to call ratio is one of my favorites. We do look at like 20 days and 10 days and variations of the put to call ratio. But we use my favorites like 5-day put to call ratio, and we look for a spike above 1.0 to up to about 1.2. Then we'll also look at other various sentiment like survey indicators like the AAII, bullish and bearish sentiment indicator. Right now, actually, they're both at extremes with very little subdued data that came out this week. So we are kind of looking at possible, option selling premium environment. Now, there's other factors that go into that, but this is something we don't want people to get caught off when they do start selling premium, because as we know, you don't want to get caught off because you don't want to be liable for that margin. You're looking to either close it at a very profitable trade or possibly expiring worthless.
What you really described there is so key. In fact, I'll share with you a little story. The podcast audience out there knows it. But in the first 60 days of me starting to trade, I lost 2/3 of my account. I really knew what I was doing, let me tell you. Well, at least I thought I did. And what happened was I was buying calls like a madman. I'm like, the market always goes up. There's going to be a Santa Claus rally. This dude's going to be retiring at the beach by the end of January. No problem.
We've all been there.
Yeah. So I was buying the nuts out of some long calls. And then, it's really funny. It's like the market didn't do what I thought it would. Or if it even did go up, it didn't go up enough to really offset what was going on here. And so, oh man, I had this discussion with another guest and it got really technical. So my deltas were not increasing fast enough to offset my thetas. So it may have been going up. It may have been trending in the direction I wanted, but the time value of those options was decreasing every single day more than the movement value, I guess you could say. So when it comes to options trading, the first thing I tell people is don't start options trading unless you know what you're doing, because there are so many more moving parts than just it's going to go up, I'm going to make money. It's going to go down, I'm going to lose money. In general, that's what a stock would do, right? You buy it at 100, it goes to $100 and a penny, you're profitable. Or if it goes down to $99.99, you're losing money. But with an option, even if you want it to be, long, you've got to really have the right strategy in place. And a lot of options traders, they lose their shirt because they just have no idea what to do. And then managing your risk to go along with that. I'm a member of a Facebook group. It's called like Options Traders Facebook group or something. Okay. And this guy was talking about how he's throwing in the towel. He's going to quit trading because he'd lost $25,000 of his money, and he's never seen a return. He doesn't get it. He doesn't understand it. And I'm like, dude, I know what you're going through. But also, I was too stubborn to quit. So, I blew up my account twice actually. But then I started figuring things out, and now here we are on the podcast, right? But yeah, it what you're talking about there, being aware of what's going on out there. To your second point, being long is one thing, but being long strategically in the right way, that it takes some work. It takes some know-how.
Correct. To your first point, sometimes it's all about just surviving for you. Yeah. But to the second point, yes, exactly. You want to be long strategically, or selling even, premium strategically. So you want to be aware of everything. We don't want people to go out there blindly, like many do to begin with. They sometimes take blind bets, and that's why my first 2 points have been on topics where we want them to kind of look at an overall structure when they are making their trades.
Yeah, absolutely. So what is your third tip there?
So the third one is, and it's something that we use here at Schaeffer's, is we always want to make sure that we have an edge in our trade. And we try to look for at least two different unique drivers that possibly others may not know, or very few people may know. Just for example, one of them is we like to quantify data here, so we kind of have an idea of where we're going to go within that option movement. So one of the things is we take is moving averages. Now, as you know, everybody uses the 50, the 100, the 200, but here at Schaeffer's, we do use those, but we also like looking at unique moving averages, like the 70-day or the 160-day or the 320-day or even the 1,000-day. Which is a little bit different. Not everybody looks at those. So what we do is we look at over a certain time period and say, hey, there's been 10 signals when it's hit, say, the 70-day. 8 of those signals have been positive over a 21-day span. And then we want to see what that average return was. So then we have at least an idea that 80% of the time, this security possibly could go up, say it was 12%. That not only helps us with the direction of the bet, but it also helps us with the selection of the time for that option that we might be taking on that position. Other things that we kind of look at that are a little bit different and unique are, year-to-date levels and year-over-year levels, whether it's 100%, 50%, 20%, 10%, or year-to-date break even, and you can go in reverse to the negative side as well. We also look at significant levels off of, like, say, a 52-week period, so like the 52-week high or low. We want to see possibly, are we up 20% off that low? Because these are all areas that we view could be support and resistance. There's some other unique ones as well that we use regarding market caps like that we've seen that work. And then also we really try to drive in some sentiment indicators as well. Again, we go back to things like the put to call ratio, but we run it on individual securities. It can be anywhere from a 10-day, a 20-day, or a 50-day, but we try to look at the buy to open because that is more speculative betting, I guess you would say, on that security. So we try to look for that as like a contrarian indicator. And then also short interest, looking at see possibly is it trending higher, is it at an all-time high and rolling over, are we able to kind of catch shorts so we can see a squeeze if we're going to go along a call option, or conversely, is it super low? Are we going to be able to put bets on here with low implied volatilities and have a very low risk of getting caught in a short squeeze? And then finally, we kind of look at some other proprietary things that we have on our own. I won't list them out, but we use some things like volatility scorecards so we can see how much movement might happen within that security itself.
Mm-hmm. That makes sense. So whenever you're talking about these obscure moving averages, right? Yep. Like the 70, the 320, is that something that was like incidentally noticed, or was that somewhere along the line somebody was running a screener and it was like, hey, every time at the 70 it does this thing?
So back a long time ago, I know it was kind of like, hey, we've noticed this, it's happening. So then what happened was when somebody started noticing like these different unique moving averages were working, great example is like the 320 day, we're like, well, they were like, let's quantify this data. So now we've had this data we've been in business 38 years, and I'm going to guess I know this data goes back about 20 years on the unique moving averages. That at least that's in our database itself. So that actually is different and something unique. But again, yeah, it was kind of, hey, why is it stopping here all the time? There's a few other things that we kind of look at like that as well. IPO price is another weird one as well that we kind of look at.
Interesting. Okay. So there you go, folks. There's three trading tips, three better trading tips every options trader needs to know. The first one is knowing the term structure, right? The second one, what was the second one again?
Knowing when to go long premium and when to sell premium.
Right, which is super key. I mean, that to me, like you want to go long or short, whatever, take your pick. But knowing which strategy to use in that market scenario, that's really key here. So absolutely. And then the third one is using some other indicators like what they offer at Schaeffer's Research there, and as well as something like I like to use the 5 and 20 crossover. That's okay. A nice one I like to use a lot. But yeah, absolutely. So if you've had good luck or you've seen research or things like that on other moving averages, then yeah, using those in combination with the term structure and knowing the volatility structure set up for the trades, yeah. Those are three better trading tips. I agree.
All right. Yeah, correct. We just want people to be able to maybe quantify something and find something unique that others don't know because it gives them an edge in the trade.
Yeah, absolutely. And that's what we're looking for every time, right? Like I like to say, tools, tips, and tricks to help you trade faster and trade smarter. It's not just a tagline. Like I legitimately am looking for my own ways. And for the audience out there, I want to know all the tools, tips, and tricks. I want to trade faster. I want to trade smarter, right? Man, I've been talking about this to a few people lately, but I saw a YouTube commercial, and I'm sure you see them all the time as well, where it's like it was some sort of investors academy, and this person was talking about how their best students average 18 hours a week inside the academy, and their worst students average 12 hours or less. And I'm like, oh my gosh, I could not imagine spending 18 hours a week on your platform. So yeah, trade faster and trade smarter. That's what I prefer to do. And then knowing tips like this, right? Like you and I, we didn't just take 10 minutes to learn these strategies and go off to the races, right? I mean, this is years and years of knowledge, of experience, and getting firsthand opportunities to see how things work and how they don't work and how they can turn into expensive lessons, right? Our Wall Street tuition, you could call it.
I've done that myself, and then just the experience that's passed down from the guys here at Schaeffer's. They've been around 38 years.
Oh man, that's a huge leg up for you there for sure.
Exactly. I mean, all the information. Like I came over here from other firms, and I mean the information that was passed along was extremely beneficial and honestly irreplaceable. So.
Yeah, that's why I like having interviewees on the podcast, because I can only give so much of my personal experience, but being able to draw upon on your experience and other experienced traders as well, just really makes a huge difference. Now tell me more about Schaeffer's Research. Like if the audience out there wanted to learn more about Matt, you'd head over to schaeffersresearch.com. I'm going to spell that for you because it's not easy. It's SCHAEFFERSRESEARCH.com. So it's schaeffersresearch.com. What could they find out more whenever they go there?
Well, first, we were one of the very first options newsletters 38 years ago, as I said earlier. But what they'll find is we'll have news on options, and we also offer trading services as well. So they can look at the trading services if it's right for them. Definitely sign up. They get direct text alerts or email alerts directly from us, however they choose. We do have multiple strategies and package strategies, but they can also just go there for news and midday market checkups, end-of-day market checkups that we have going out every single day. And then once a week, we also have the Monday Morning Outlook, which our Senior Vice President Todd Salamone writes, and I fill in from time to time. You can kind of check on that, and that's a broad market overview every Monday morning for your trading week.
Gotcha. Well, very, very cool, Matt. So if somebody was to reach out to you on social media, I asked him this question earlier, where could they reach out to you at?
They can reach out to me at Offbeat Operator.
Offbeat Operator. Whenever he said that, my first thought was he must do some DJing on the side.
Yeah, unfortunately, no DJing. It's just kind of a crazy name.
No, it's perfect. So Offbeat Operator, at Offbeat Operator, and then make sure you guys check out schaeffersresearch.com to learn more and to see maybe how they at the Schaeffer's investment team could help you out. So Matt, seriously, thank you so much for coming on today, sharing some of your knowledge and wisdom, and helping the audience out there have 3 better trading tips as they go forward today.
Thank you. It's been a pleasure, Chris.
Absolutely, and thanks again for coming on. And thank you guys for tuning in to today's How to Trade Stocks Options podcast. Please be sure to like, subscribe, and enable notifications. That way you'd never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode. Hey, did you realize that you could get the secret weapon that every investor needs right now to start changing your financial future for free? Yeah, that's right. Just head on over to triplestockprofits.com and download your free Triple Stock Profit System ebook today. 10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. Thanks for stopping by.